Our property markets are flat, and some investors are worried that the value of their properties are falling. Many are asking, what will my property be worth next year? Hi, I'm Michael Yardney, and I was just thinking about it. Each Monday, these investors look at the auction clearance results, and every month they check on the median property values. Look, while it's not as bad as watching your shares prices fluctuate in value, on a minute-to-minute basis, this short-term focus is unhealthy for investors. Because in general, they're in it for the long term. So I think a better question to ask would be, what will my property be worth in 10 years' time? The scary thing for some is that there are commentators out there suggesting property values won't rise for years, some say for another decade. They say things like, just look at the mess the financial world has got itself into. But there's nothing new about these property pessimists. They've always been around, and you know what? They've always been wrong. Just have a look at what happened to property values in the first decade of this millennium. Actually, before I discuss that with you, I'd like to spend a moment just reminding you that in October I'm going to be running my Real World Real Estate Workshop. It's Australia's longest running advanced property workshop, and if you want to take your investment up to the next level, if you want to play with the big boys, especially if you're interested in getting involved in property renovations, and particularly if you're interested in getting involved in property development, why not join us for 3 days? Just click on the link below, find out all about it, and I look forward to spending 3 days with you in October at my Real World Real Estate Workshop. Back to what we were saying a moment ago, let's just have a look at what happened to property prices over the last decade, since the turn of the millennium. I can clearly remember the turn of the century. While many were celebrating a new millennium, others had concerns. Some were worried that the millennium bug would melt down our computers, and others were uneasy about our property markets. We were moving out of a difficult decade which commenced with a long recession, the recession we had to have. And these property pessimists were concerned that property values would never increase any further. However, at that time we were paying less than $300,000 for an average house in Sydney, less than $245,000 in Melbourne, $144,000 in Brisbane, $149,000 in Perth, $188,000 for the median house in Darwin, $128,000 for the median house if you lived in Adelaide. If you were in Hobart, you'd pay less than $113,000 for a median price house. Now just fast forward over the first decade of this millennium, 10 years or so, and look what we're paying for the average house today. In many cities, property prices have increased over 140%, despite having a recession in 2001, despite having the introduction of the GST. Remember, there was a dot-com stock market crash. Some people called it the tech wreck. We went to war with Iraq. We had a change in government. We had periods of high interest rates, periods of low interest rates, and we had the worst economic downturn since the Great Depression. All in that last decade, and still, look what happened to property prices. In fact, I'm sure that more Australians would have bought properties 10 years ago if they knew what would have happened to values over the last decade. Now, of course, I don't know what's ahead in the next 10 years, but I do know that there'll be just as many hurdles to jump over as there were in the last 10 years. But remember, obstacles are the scary things that you see when you take your eyes off the goals. And while parts of the world, sure, they're in economic turmoil, Australia's main trading partners are experiencing boom times. And the good news is that the fundamentals suggest that the next 10 years are going to be just as good, if not better, for property than they were in the last 10 years. We're moving into a new economic cycle driven by the mother of all resources booms. At the same time, our population is still growing, so we need more dwellings. And because of the way we're living, because we've got forming smaller households, we need more dwellings for the same number of people. However, in some areas, we've got a shortage of housing. Overall, vacancy rates are low, rents are rising, and the cost of new construction is escalating. Putting all this together means that property values are once again likely to rise significantly over the next decade. But if history repeats itself, and it will, during that time we're going to have another property boom, another property slump, and most likely a recession of some sort. So to safely steer through the next decade to the point where their property values have doubled once again, successful investors are going to have to disregard all that market noise and not be intimidated by the small stuff. Things like interest rate increases, tax issues, and the negative news in the media. Instead, they're going to have to focus on the big picture. Look at it this way. Imagine you were a visitor from overseas and came to any of our capital cities 10 years ago and returned again today. You'd scarcely recognise the new landscape. Now consider what our cities are going to look like in 10 to 15 years' time. The key drivers of how our property markets are going to change will be population growth and the changes in our lifestyles and our housing preferences. So, it's really by analysing demographics, the study of populations, that we're going to understand what the future of the property markets holds for us. These issues are far more important. These big picture issues are important than the little changes in interest rates or the cyclical economic fluctuations that we're going to endure. Because these relatively secondary influences won't change the momentum of our population growth. The huge growth that is going to have its own defined housing requirements. Recently, economist Christopher Joy explained that Australia is likely to absorb 2.3 million additional households, not people, households, in the next 15 years. BIS Shrapnel estimates that this is going to translate into a new home requirement of about 3 million properties. That's once you take into account the demolition of the old houses and the historical share of unoccupied places, things like holiday homes. There's no doubt that this substantial increase in population is going to bring many social, political, infrastructure and environment concerns. But it's also going to ensure that well-located properties are going to double in value just as they've done over the last decade. And the decade before that, and you know what, the decade before that too. At the same time, there's going to be billions of dollars worth of activity in home extensions and alterations. We're also going to require more shopping centres, nursing homes, hospital beds, as well as schools and petrol stations. We can take reassurance from these figures that over the next 10 years, conditions in our capital cities are likely to be even better than we've experienced over the last 10 years. And overall, properties are going to increase in value by billions of dollars a year, and they won't care who owns them. It's going to become even more fascinating when you consider that Melbourne and Sydney are each going to probably require around 40,000 new apartments in the next 10 years. If you think about it, this is sort of the equivalent of 200 high-rise buildings, each accommodating 200 apartments. Things are going to get pretty interesting because while our community requests less urban sprawl, they also want less high-rise living. So the idealistic preferences are going to have to give way to reality. I guess it's likely we're going to have more decentralised development in the future with the emergence of medium or high density residential buildings in the suburbs rather than just in the inner suburban areas. These are most likely to occur around on the main roads, close to transport terminals, close to railway stations, maybe even in conjunction with the large shopping centres. We're also going to see a continuation of the trend of integrating medium residential development along the strip shopping centres, the main high streets we've got now. So it's really going to be interesting to look back in 10 years' time and see how things panned out. In the meantime, though, successful investors are going to take a big picture view. They're going to buy more well-located properties and see the value of their property portfolio steadily increase. Now, if you want to get ahead of the pack and make the most of the next 10 years, I really recommend you join me for my 3-day real-world real estate workshop that I'm going to be holding in October. It's Australia's longest-running advanced property training, and it's going to be your chance to invest 3 powerful days and learn renovation and development strategies that experienced property experts are using around Australia. They're using them to manufacture capital growth and to generate strong rental returns. It allows them to win in today's challenging property markets. So please take your property investing to a whole new level. Click on the link below and get full details and read all about the bonuses and my money back guarantee. And if you're one of the early birds, you're actually going to have a one-on-one strategy session with me after the workshop to make sure you implement all you learn. Now, I'm going to keep you up to date with how to take advantage of the changing property markets in future updates like this. But it's probably appropriate to remind you that in times like we're experiencing, no one can quite help you like the independent property investment strategists at Metropole. Remember, our award-winning team of strategists have no properties to sell, so their advice is independent, it's unbiased. If you want to find out a bit more about what's happening in your local market and what our research suggests is in store, why don't you join us for a free property briefing in Melbourne, Sydney or Brisbane, or with our associates in Perth. Just click on the link below to find out more and reserve your place. Of course, I'm going to keep you updated on how to take advantage of the markets in my regular property market updates. But so much is happening that I'm now putting out a short post every day in my blog. It's a different link, so click on Michael's blog link up top there and subscribe to it. It's a different subscription to my regular newsletter and it gives you my short daily updates. Look forward to catching up with you in a fortnight. Have a great week. Make it a great week. This is Michael Yard.